Hello everyone. Today my session is for AR to GL reconciliation. So I will show you how to reconcile AR to GL and how to find out the difference. Okay. So this one I will show you through the front end. So I will have two sessions. One is through I will go through the screen and all the reports. Okay. And will match AR reconciliation account with the GL. Okay. And second session I will record for AR to GL reconciliation, which will be through the backend. So I will prepare the query. Through the query, I will match AR to GL. So this session, or this is the first session to reconcile AR to GL through the screen and reports. So friends, okay, I have prepared one sheet. So these are some accounts. I will book the transaction in these accounts, okay, and then make it some scenario like I will run the create accounting, so it will transfer to GL. Then I will apply on the receipts and I will leave as unapplied on account. So in the AR reconciliation reports, we can see the balances in the each tab, so which will be like more clear for us, okay, to reconcile the balance and to understand the AR reconciliation report. Okay, so let's start. First I will show you. Okay, I'm in the AR responsibility. So first I will run the AR reconciliation report in March period to just make sure there should not be any balances. Okay, so I will run first for 1st March to 31st March. Because I will do the reconciliation for March period. Okay. Okay, so now you can see there is no balance in the March period. So all are 0. Okay, so this is a previous balance which is coming till 28th of Feb. Okay, so it's the ending balance of the of February 21, which is the opening balance, which will be the opening balance in the March 21. Okay, so I will explain you later, okay, in more detail. Just now just make sure that there is no balance in this period. Same I will go in the trial balance, GL trial balance, because we have to reconcile AR to GL. Okay. So I will submit this for PTD. So you can see there is no balance debit credit in the March period. So there is no entry. So now it's very clear to book the transaction and run the create accounting. So we will come to know like what are the balances transfer and how the account will reconciliation. Okay. Okay, just let me clear this sheet. This is just for you to understand and explain you like in the clear way. So these are the accounts which I will use in the AR transaction. Okay, these are the receivable accounts, right? And this is a transaction number which I will book for each account, like I will book 2 to 3 transactions, and amount, receipt number, and receipt applied and receipt unapplied and receipt on account, and transaction applied on receipt, and GL manual entry for a receivable account. Okay, so this is a sheet which I prepared. So now I will book like 8 to 10 transactions. So let's start. Okay, so before starting, I just want to give a overview for AR reconciliation report. Okay, let me open the existing AR reconciliation report. Okay, so in the AR reconciliation report, you will get the balances, the ending balances of the previous month, which will be the opening balance in the current month. Say for example, March 21. I am the March 21, so the ending balance of the February will be opening balance in the March 21. Okay, so this is a transaction register. So it will show all the entries, means all the balances for the transaction which is booked in the receivable accounts. Okay, so you will get the balances in the transaction register tab. Okay, and if you want to cross check, so we have separate report. Oracle is already provided the separate report for the transaction register, which you can run and you can tally transaction register report should match the balance with this. This is a transaction balance, a transaction register balance. Okay, so same for adjustment register. This is a on account credit memo refund. If you did any credit memo refund, so it will show the balance here. Okay, same applied receipt register, applied receipt general entries, unapplied receipt register. So these also having the reports also. So it will be more clear when I will do the practical. Okay, so let's start. Let me create first some transaction. Okay, this is with 1000. I will use the account 1720. Save. Complete. So this is a transaction number 1000. Okay, same account I will create one more transaction. So this is the second transaction I booked for the same account. This is a transaction number, amount is 2000. So it will be very clear there. Now I will create the third transaction for 1810 account. Now I will create the transaction for 1813 account. One eight one three. So I have created the transaction, 6 transactions so far. So each account I'm creating 2 transactions. So this is 1961. This is the last account which we are booking a transaction. Okay, so these all are the transaction which has been booked. So now I will run the create accounting. So these all transaction is booked in March period. So it will be transferred in GL in March period. So I will run the create accounting program. Okay, so now what will happen? The create account will be transferred into GL. Okay, so the first step, now I will run the AR reconciliation report and I will show you one part, okay, which is for the transaction register. So step by step I will clear, so it will be with lengthy video, but it will clear all the concept. To record a session, my purpose is to record a session is to make you understandable, right? If you are not understanding and my concept is not making you clear, then there is no use to record a session. So once the create account is completed, we will run the AR reconciliation report. And friends, if you have not subscribed my channel, the Oracle King, please subscribe my channel to get update on the latest video which I will upload. Okay, so this is my channel name, the Oracle King. Okay, you can see on the top of the Oracle screen also, the Oracle King on YouTube. It's on YouTube. And you can leave your comment for each video if you have any query, and how is the video, and if you have any topic you want the video for that topic, you can just comment me. So I will try my best to upload the video for that topic, and I will try to give the answer of your query. Okay, so now we can check almost the create account is completed. Okay, so just check one transaction. Okay, create account is already done. View accounting. Okay, so account is transferred to GL. So now what I will do, I will run the AR reconciliation report. Okay friends, now you can see the transaction register, it was before the zero balance, with the zero balance. Okay, now it's showing the total is 50,000, 55,000, sorry. So the transaction is booked 55,000 and it's posted in GL 55,000. Okay, so which means the both 55,000 minus 55,000 is zero, so there is no difference. Okay, so the first thing, the transaction register, we have booked the transaction for, say example, okay, this is some 55,000, right? Okay, so you can see the same like 55,000 in the transaction register, and if I run the transaction register. I will also run the transaction register. In transaction register, it will show same balance 55,000 USD. Okay. Okay, so you can see I have run 1st March to 31st March. So these are the transactions which is booked in Oracle. Okay. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 transactions I have booked, okay, which is mentioned in the Excel sheet also. Okay. And the balance is 55,000, right? So this is the first step, okay, to just make sure an AR reconciliation report for the transaction register, here it should be 0. Okay, so if any difference, so you have to find out this one. Okay, so why it's different? So this is for AR reconciliation. Okay, I will go to in GL, okay, to show you how to reconcile AR to GL. Okay, balance uh, in GL. Okay, now the second step, I will do I will create a receipt. So I will create a receipt for this transaction 1000, receipt number 101, and receipt applied is with 1000. So I will apply this transaction and save it. Okay, so this is in the applied status with 1000. Second receipt I will create. I will create second receipt for 2000, maybe 5000. Okay, sorry. And I will apply this transaction. Save it. So now you can see applied amount is 3000 and unapplied is 2000. Okay, I will create one more receipt. say 4,000. I will apply this transaction. Receipt apply with 2,000 and save it. And remaining one, okay, remaining 2,000, I will apply it as a on account. I will park in on account. So it's 2,000 balance is applied and 2,000 on account. So on account is 2,000. Okay. I will run the create account first. So after booking the transaction, apply with the receipt. Some transaction we have partially applied and leave balance as unapplied, on account and applied. So now your reconciliation report is ready to reconcile the GL. So I will run now finally a reconciliation report. Okay. Once the accounting program is completed, I will run a reconciliation report. Okay, so now you can see the balance. Okay, now we have Excel sheet. We will match everything with the Excel sheet. So for example, this Excel sheet is just like a manual transaction is booked by user. Okay, this is not a more transaction. This is just an example to know the process. So this first one is clear. Okay, we have clear. We have a transaction with a total amount 55,000 US dollar. Okay. Now come to the second point. Applied receipt register. So we can see 6,000 balance. Okay. So we will check in our Excel sheet how much should be the receipt applied balance. Okay. So we can see in the receipt applied is 6,000, which means our system is working fine and our balance is correct. As the transaction received is booked by user, which is correctly accounted by the create account program. So if you want to check the same balance in the applied receipt register, is it showing the right balance? If you are not confident, no, this is just I am telling you the steps, because if you are experienced, okay, so of course, okay, you know, like uh, how it's work, okay, applied receipt register and transaction register. So I will run the applied receipt register report. So this is applied receipt register report. So these are the 3 receipts which is created with applied transaction. So you can see the receipt number and applied to which transaction is applied and what is the customer number. Is all the information regarding the application you can get here. So the total is 6,000. Okay. So I hope this is also clear. Now let's move to the next step. So here is our reconciliation report. Yes. Okay. So now the third step is unapplied receipt register report. Okay. In unapplied receipt register report, we have the balance 4,000. Okay. But unapplied receipt register report, it's considered the on account, unapplied, claims investigations, prepayment, all these types. Okay. It's considered by the unapplied receipt register report. Okay. So we have booked the receipt in on account also and unapplied. So we will check first in Excel sheet. So if you check unapplied, we have 2,000 and received on account, we have 2,000. It means 4,000, which is matching. The total is 4,000. Now we will cross check with the unapplied receipt register report. I'm telling you how the system behaves and how the linking and how the data is populated in AR reconciliation report, and what are the reports to just cross check, because AR reconciliation report can show all the data. It will just summarize the balance. I will run the unapplied receipt register report. Detail. So AR to GL reconciliation, we have 2 ways. One, which we are doing right now, and second, we can also reconcile through AR to GL through the backend. Means you can prepare the queries. So through the query, you can reconcile the AR accounts with the GL. So I will show you the second way. I will record one more session, AR to GL reconciliation. So this is an applied receipt register report. So now you can see the total balance is 4,000, unapplied amount is 2,000, and on account is 2000. So total is 4000. Okay, and you can see on which receipt payment number 102 is unapplied amount. So we can go to our Excel sheet. 102, where is our receipt number? This is receipt unapplied. And 103, this is on account. 103, this is receipt number 103, this is on account. Okay, okay, so now this is the total balance. Okay, this is the total balance of the AR reconciliation report. The total balance means this balance, this is opening balance. Okay, and plus transaction register. Let me just prepare the Excel sheet. This is the opening balance. This is the ending balance of Feb 21, but opening balance in March 21. The ending balance of Feb 21 will be the beginning balance of March 21. Okay, so I will show you how you can find the ending balance of the Feb 21. Okay, now second is 55,000, which is transaction register. 6,000 applied register, applied receipt, and 4,000 unapplied receipt register. So total is 28,476,81821. So this should be the ending balance of March 21. 28,456,818. Okay, just yes. Okay, so what we are doing, we are adding this one, but it should be the minus, because if you see in opening balance this one, then in opening balance you will add a transaction register, adjustment register, on account credit memo refund, and applied register you will do minus, because once you applied the transaction on the receipt, it will reduce your receivable. So that's why you have to minus applied register and unapplied register. So it will reduce your receivable balance. Okay, so I have to do minus minus. So now if you check, this balance should be matched with the ending balance 28456,818.21. So this is the same exact balance which is matching in the AR reconciliation report. Okay, so now let's discuss about the opening balance, which is the beginning balance of March 21. Okay, So I will run AR reconciliation report. AR AR reconciliation report for February, Feb 21, 20, submit. Ending balance of Feb 21. So now you can see, okay, this is for February, 1st February to 28th Feb, right? So the balance is ending balance 28411,818.21. 28411,818.21. Okay. So this is the AR reconciliation reports which shows all the balances for the transaction, applied receipt, unapplied receipt, on account, or on discount. So whatever means activity happen in the AR. Okay, so this is one thing. Now this balance should be match into GL. So before GL, I will go to GL. And I will submit the trial balance report. March 21. But make sure before reconciliation, you have to make sure in AR you have to run subledger period close exception report. If any exception is there, you have to clear before the reconciliation. Same in GL, you have to check any unposted entry or any transaction stuck in the GL interface. So you have to check this one. Okay, so we can see there is no activity. There is no activity showing here. Okay, so now we will check unposted. So I will post those journals. I can see there are two journals. We post first. Okay, the posting is successfully done. I will post for second one. So this one is also posted. Now I will submit the trial balance report. it's completed. So now you can see the balances. This is 10,000. This 10,000 is for receipt, which is cash. So when you create the receipt, the cash account is debited, and receivable account or on account or unapplied account, these are the credited account. Okay. So let me check first in the Excel sheet. We have created 3 receipts. Okay. 1, 2, 3. Okay. The total receipt amount is 1, 2, 3. Yeah, it's correct. Okay. Total receipt amount is 10,000. The total receipt amount for receipt 101, it's 1,000. For receipt 103, 2,000 we park as applied and 2,000 we park as a on account. So total is 4,000. Now on receipt third, 3,000 we park as a receipt applied and 2,000 as a receipt unapplied. So total is 5,000. So in the cash account, it should be 10,000. Okay. So we can see, and this account is for cash. This account. Okay, you can go to that bank account, and in this bank account you can check the cash account. Okay, what is the cash account? So okay, this is a cash account for the WOFA bank account. Now next move to the second tab, 4,000. This is 4,000 as an unapplied cash. Okay, so unapplied cash. Now you can see the 4,000. If we go and unapplied, the 2,000 and 2,000. This is a 4,000 because for the unapplied and on account we are using the same account. Okay, so that's why it's going in the as a 4,000. Now next is this account. Okay, we have this receivable account. Okay, so normally we reconcile our receivable accounts. Okay, so these are the 5 accounts which I booked the transaction. So if I check 1720, I have booked the transaction 1,000 and 2,000, which is total 3,000. Okay, and 3,000 is applied. So if you see 3,000 debit and 3,000 credit, so which means it's a zero. It's a zero balance for 1720 account in March 21 period because we have debit and credit. Now for second 1810, we have booked the amount 3,000 and 4,000, which is 7,000. In 7,000 we will do minus 3,000 and 2,000 because the 3,000 we have applied. Okay, and 2,000 we have parked as a unapplied. So it will be, see, the total amount is 7,000. Okay, and credited is 3,000 because we have applied 3,000 on the receipt. So this transaction is applied on this receipt. So now the remaining amount will be 4,000. So 7,000 minus 3,000. Okay, so because when you book the transaction, receivable account is debited and revenue account is credited, right? So when you book the transaction, then cash account is debited to receivable account is credited. Okay, so now what happening here when I book the transaction, the receivable account is debited with 3,000. Here I book the receipt, so receivable account is credited with 3,000. So now the remaining balance will be 4,000 because the 4,000 debited. There is no receipt book against against this transaction. Okay, so that's why it will be open. Okay, now you can see, means okay, 4000 is available. Now let's go to the 1813. So 6 and 5, 11,000. So there is no receipt is booked for this account. So this should be 11,000. Okay, so you can see 11,000 in this account. 11,000, 1813. So same we will go to 1814, 8 and 7, 15,000. So 15,000 we can see 814. It's a 15,000, right? 1961. It is 1961. This is a 1961 account. So same for 90,000. There is no receipt book. So the receivable is with 90,000. Okay. So now you can see our balance is properly reconciled with the GL. And if you want to see the details, say for example, I have booked this transaction, right? For this account, I want to see the details. So I will go in GL and submit account analysis 132 CAD report. So this report will show all the balances in the details for only specific account. Period March 21. Okay. Account say 1810. Okay, I have to give so in account inquiry, so you can see debited 7,000 and credited 3,000. Okay, so these are the code combination, the batch. Okay, this is a source. All these details, okay, you can get here. And same thing you can check through the screen also. Go to inquiry, account, go to account. I can give the account details. What is the account? 1810. I'll check 1810. So balances. So now you can see the total PTD is 4,000. So through the inquiry screen in GL, you can also check the balances 4,000. So if you check for 1810, the total transaction is booked with the 7,000. We have applied received with the 3,000. So it means the remaining amount is 4,000. If I go in detail, general details, so it will show the details. Sales invoice, which is invoice you booked 7,000, and this is a receipt you have booked with the 3,000. Okay, so if you go in the drill down, you can also check. Go to drill down, so it will show like full detail, and even you can reach to the screen also. Okay, so if I go on the view transaction, okay, so you can reach from where this 3,000 balance is coming. Okay, so you can you can drill down and you can show the full general, whatever information you need, you can check through the inquiry window. So this is a process how to reconcile AR to GL. If any manual entries, if any manual entries is booked for this account, so you can run the account analysis 132 cat reports. So in this report, what will happen? The source will be different. If the source is other than receivable, okay, so then you have to consider that part is also in the reconciliation. Say for example, now the 7,000, okay, so this is exact matching with the AR reconciliation report. If there is one more line, if there is one more line with source, say for example, manual entries, manual entry is 1000, okay, so you have to also consider that part, okay, that 1000 is booked as a manual entry and receivable is 7,000, so which is matching with the AR to GL reconciliation. So this is the overall process to AR to GL reconciliation report. Thanks for watching my video. If you like my video, please subscribe my channel, and please don't forget to subscribe the channel The Oracle King. If you subscribe my channel and like, you will get the latest updated video. The next topic which I'm going to upload, I will upload the one more video for AR to GL reconciliation session, okay, which will be through the backend. I will prepare the query, so you don't need to go through like through the backend. Sorry, through the front end. So through the backend, through the query, you can get the accounts, transaction details, what is the balance in the subledger and what is the balance in the GL. So all these details you can get. Okay. Okay. So thank you for watching my video.